Hello, everybody. It's David Scott Peters coming to you live from Phoenix, Arizona at the world headquarters of therestaurantexpert.com. You are in the right place if you are here for our seminar, our webinar, our live YouTube event, whatever you want to call this thing, called Stop Bleeding Labor Dollars Before Your Week Even Starts. So you're in the right place if that's what you're here for. Do me a favor, we've got a little housekeeping to do before we get started. And one of the first things I want you to do is if you'd like to participate using the chat function of this YouTube live event, you need to log into your YouTube account. Usually it's a Gmail account or whatever you used. But if you take a moment to log in as yourself, to log into your YouTube channel, or your account, I should say, you'll have the ability to participate. If you don't log in, you're not going to have that ability. Now, the webinar's got a lot to go over. As usual, I'm going to teach, and then I'm going to show you how we do it real world using our software as an example. So you want to stay to the end. I'll answer your questions. Before we get started, I've got a couple things I'd also like to do. Do me a favor, in the chat function, assuming that you have logged into your YouTube channel, let me know where your name of your restaurant, where you're tuning in from. We'd love to figure out where you are and reach out. Do know that I'm not going to see your chat. I've got Jenny Brooks and Greg Sauerback on my team. They're going to be answering questions for you. And then throughout the webinar, they're going to give me any questions you have via another chat. I've got 3 screens here, really 4 screens that I've got to pay attention to. So for me, looking at the chat window, that would be a little nuts. So we're going to do our very best. If it's an easy answer, they're going to answer for you. If not, they're going to save your question, give it to me at the end right here, and I will answer it personally. Also, do a guy a favor, and if you like what we do here, click on the like and subscribe now. If you subscribe now to my YouTube channel, we've got weekly updates. You'll be notified immediately of. I put a video up on a weekly basis. We try and do these on a monthly basis, so you can be in the know just like that, just by clicking on that subscribe now. So we'll get started here in literally about 1 more minute. Again, for those of you who are joining a little bit later, I want you to do me a favor. I want you to log into your YouTube channel. That way you can use the chat function right on next to my beautiful mug here, so that you can participate, because I'm going to ask you questions like right now. What's your name of your restaurant, where are you tuning in from, so we kind of give an idea. I'll ask questions throughout the webinar and may look for your response. I'll look at later, and again, my team will capture. Otherwise, this is going to be your time. We're here for you, to help you, the independent operator, get your life back, make more money, have managers know what their job is, and today is no different. We're going to talk about stop bleeding labor dollars even before the week starts. So we're going to start in about 2 seconds here. I'm just going to look over here, and I think we're good to go. So let's get started, shall we? Hello, everybody. This is David Scott Peters coming to you live from Phoenix, Arizona at the world headquarters, therestaurantexpert.com, and I'm thrilled about today's YouTube live event. We're going to talk about stop bleeding labor dollars before your week even starts. How is it that we can go into the week on budget? Instead of doing what most restaurants do, bring everybody in and pray we're busy, and hope we're busy. If we're slow, we send people home. By then, it's too late. See, if I buy too much food, I can use it tomorrow. Hopefully not stolen, wasted, spoiled. I can use it tomorrow, but as soon as the clock goes tick, you owe. If somebody punches in early and you say go home, federal guidelines say you can have them punch out, but you can't remove those minutes. I don't care if it was 60 seconds. They're going to get paid for those 60 seconds. We can only remove time if they forget to punch out. So that was the time they worked till, and that's truly what the federal government is looking for, is you get paid for the time you work. Well, we know there are a lot of blood-sucking, I should say dollar-sucking practices we do in the restaurant business when it comes to labor, but the one thing I want to help you with today is literally, how do we go into the week on budget instead of scheduling too many people and hoping we're busy and we can handle that. That's what we want to do. So let's get started here. First of all, for those of you who don't know me, most of you do, I grew up my family's restaurant and catering business back in Linwood, New Jersey, where I worked for the toughest manager I know. If you've ever worked for your mom, you know that it sucked, right? I hated every minute of it. Why? Because I was a teenager, and she said to my sister and I, you're going to work, she basically wrote us twice as hard as anybody else. She said there'll be no favoritism. Right? If anything went wrong one way or another, and it looked like there was favoritism, she'd lose respect, we'd lose respect. So as a teenager, I hated it because she wrote us twice as hard as anybody else. But she did me a favor. I had a work ethic like nobody else around me. As I went to other jobs, I grew. My career, I went up very quickly. So she did me a favor. As I tell people, payback's a bitch. She works for me now. With that said, I took those skill sets, worked for a company called Coyote Springs Brewing Company Cafe here in Phoenix, Arizona. We had one location, early 90s, when brew pubs were opening one a week. We're seeing that resurgence now. But back then, it was the first wave. And it was going gangbusters. Our first location was a cash cow, hand over fist money. It was unbelievable. Our second location was much like owning a boat. Those of you who own a boat know exactly what I'm talking about. A hole in water in which you throw money. Well, as one made money, the other sucked it dry. And this is where I developed what I call my restaurant operational smart systems. Restaurant systems that are simple, measurable, applicable, repeatable, trainable. The key with any system, it has to be simple, or how the hell are you going to get somebody to use it? It has to be trainable, or how the hell do you get somebody to use it? Because when things went wrong, I had to figure out how to make them right. Well, when it was time for me to move on, I went to work for a company called Famous Sam's, a 30-unit restaurant sports bar chain here in Arizona, as a franchisor, director of operations. We were going gangbusters. Guys who bought the company wanted to take it public. We were opening 8 stores. I created an operations team, training systems. It was unbelievable. Well, in under a year, they damn near bankrupted the company. And as upper management took off, I decided I wasn't staying. So I went and taught at Scottsdale Culinary Institute, management, human resources, wines, and spirits. And so I'm not a chef. I'm not a culinary guy, but do know, while I may have no knife skills, I cannot cook. I can run any of your kitchens if we have the right systems in place. I can order based on budget and par levels. I can schedule based on budget or staffing guides. I can open and close every station based on opening and closing side work. I can run anyone's kitchen. What I don't have is the skill sets to teach somebody how to cook. Now, do know that's a part of the systems journey. You want to make sure you have your systems, your process, your way, that whether you're a culinary professional or not, you can run your business. Well, while I was teaching, I was a consultant, and I was helping some of the Famous Sam's franchisees. And one of my main clients was the minority shareholders of Famous Sam's, who became the majority shareholders, bailed the company out. They kept asking me to come back. I kept saying no. And that was about 1 month before my first child was born. I said, okay. I walked into what really was a disaster. Company should have been bankrupt. And I was given the goal. I had to create a plan to sell the company in 5 years. I missed that goal by 3 months. I know what it is to be an independent operator. I know what makes the chain successful. It's my job to give you the same systems and tools the chains use without losing your independence. We love our guests. We love our employees, but we are going to do what they do well. What's that? Make money. That's what today is about, is giving you the right systems when it comes to labor controls to go into the week on budget. How do these big chains do it, right? Let's go through this. What are we going to cover today? We're going to talk about budgeting, how important that is, how we take that budget and create our budget targets by month and by day. We're going to talk about how we adjust that schedule based on efficiencies, not just going into the week on budget, but am I using those hours in the right days in that week? And last but not least, how by following the system, giving up scheduling gives you more control in your business, instead of you're the only person who can do the schedule in your business. So let's get started. To start off with, I want to talk about one of the most important concepts we talk about ever, and that's called prime cost. To an old-timer like me, it used to be called controllable expenses, in the control of management, how I hire, fire, train, utilize people, purchase product, utilize product. Basically, it's a management team's report card. Everything that I do as a manager on a day-to-day basis, this is my report card, because I can't control if the owner pays too much in rent. I can't control if they do a stupid advertising campaign, or worse yet, the crack cocaine of restaurant marketing, a Groupon at a 78% discount. Just say no. Either way, what can I control as a manager are people and products, and how I utilize them on a daily basis. Well, we make it a fancy term now. We call it prime cost. Prime cost is extremely important. But before we figure out where those prime cost targets are, we have to understand they're a part of a budget. And I tell people the two most important things any restaurant should have are budgets and recipe costing cards. Budgets and recipe costing cards. By the way, what do you think the two systems most restaurants never have? Budgets and recipe costing cards. Why? Because they're too hard. What? Boo-hoo. You pick the toughest business I know. right? I mean, where else do you have to be a culinary professional, have to know customer service, marketing, human resources, federal laws? I mean, all of it at the same time, executed all at the same time. And you're taking raw product and creating an incredible experience from atmosphere to the food product. We create memories. We're in the hospitality business. So if you don't want to be in the hospitality business, if you don't have the passion for it, it'll kick your ass, and maybe this isn't the right place for you. It's time to sell. But assuming you're like me and this is your passion, this is where you want to be, understand you have to have recipe cards and budgets. Why budgets? Well, it helps us determine where that prime cost number should be. But let's first look at it this way. If you get a profit and loss statement, let's say this is my P&L. When do you get your profit and loss statement? 15 days, 30 days, 60, 90 days after the end of the period, right? I've seen worse. And oh, by the way, what does this P&L represent? The past. Can anybody on this live event, can you change the past? No. I can only change the future. The past, while it's important, isn't as powerful as it could be. Meaning if I run my business purely on a profit and loss statement, it's kind of like driving your car using a rear view mirror, blacking out your windshield, and driving forward using your rear view mirror. Well, if you do that, what would you do? You're going to crash, man. What a budget does for you is we rip off that blacked out material, and now we drive our car going forward, right? It's your windshield. We plan for success. We see where we're going. We plan our route. And that's extremely important. Now, don't get me wrong. Rear view mirror, the past is important. That's where we get our numbers and where we see where we need to improve. But then we put a plan in place to change. So for instance, if I get this profit and loss statement and I don't like the numbers, I throw it on my desk and go, shit, right? That sucks. Well, now I take the last 12 months. If you work with us at therestaurantexpert.com, we actually grab your QuickBooks information. We take your last 12 months, trailing 12 months, and say if we operate the next 12 months the same way we did the last 12 months, here's how much money you're going to make or lose. And I want you to look at that and go, ew, not good enough. Then we put a plan in place. For instance, if we were talking about food costs today, we're talking about labor, but if we were talking about food costs, I'd say month one, we're going to train the purchase allotment system, key item report and waste sheet, 2 clipboard systems and a budgeting system for purchasing. And we're going to train that in month one. Month two, we find that we're going to hold people accountable to that system. And we find most restaurants save 2 to 3 points, lower their food costs, 2 to 3 percentage points like that. No recipe cards, no inventory, no nothing. We're just paying attention. Well, so I'm going to put that plan in place. And then I'm say, I need recipe costing cards. We're going to start that in month one. And that's going to take me, I think I can get them done in 3 months. In month 4, we're going to do a menu analysis using those recipe costing cards, your point of sale mix. I can find out what my ideal food cost is. And then we can do a menu profit generator call with me. And we're going to find 3 to 7 point reduction in food cost. We can plan for that profitability. And we'll have that menu on the tables by month 5. And on month 5, we reduce the food cost another 3 points. Now all of a sudden 5 points has dropped over 5 months. Well, it wasn't like we snapped our fingers and said, we're going to do better. We put a plan in place. What systems we're going to place, how we're going to train them, how we're going to utilize them, and what was our plan, and how long would it take to make those numbers work? Well, same thing happens with labor. And in fact, today, while that was the example was the purchase allotment, we're going to talk about the labor allotment. I'm going to have you scheduling on budget the next week. So either way, we put that plan together. Then we grab that profit and loss statement, put it next to our budget. We see where we hit, where we missed. And if we hit numbers, we're like, yeah. If we miss numbers, we go, wait, why? Were there systems I put in place that management isn't using? So now I've got to hold my management team accountable, retrain those systems, make sure they go in place. Or what if they are using the systems and we're still not hitting those numbers? Well, now I'm going to put in new systems to achieve the numbers I want. But more importantly, if I get this P&L and it says I $3,000 less in profitability than I wanted to be, most of us go, oh shit, I didn't make $3,000, and we'd move on. Next thing you know, next month, oh shit, I lost $2,000. Now I'm $5,000 down, and so on and so on and so on, till we get to the end of the year and we don't make the money we deserve. No, with a budget and a budget variance report, P&L and budget, when I see that I lost $3,000 in month one compared to what I expected to make, I now look at the rest of the year, the next 11 months, and make small changes throughout every month to make up the $3,000 I deserve without giving up guest satisfaction, without cutting product quality, without cutting service levels, we make small changes to achieve the numbers we deserve. See, that's a proactive management tool. I take myself, we're using a budget, I take myself from being a reactive management team running off a P&L only to using a budget to make me a proactive management tool, which allows me to plan for my profitability. This is huge. So the number one thing, budgets, recipe, cost cards, budgets really hit home. Now, I will say, I don't want you to pay attention to industry averages. I don't know what an industry average is. Like, what restaurant is average? Is everybody on this call from the same city, same street corner, same price points, same style of service, same product quality, same? No, what are averages good for? What are industry averages good for? Nothing. See, what I care about is what you do in your business. Where do we set your numbers? Some restaurants may have to get more aggressive because you have huge debts to your vendors. Some people have to be more aggressive because their occupancy cost isn't 5 to 8%, it's 12% or higher, and you're really working for the landlord. Some people own the building, and you know what? You decide that you don't want to hit those huge numbers. You're fine. You're going to give up some profitability, but that's your choice. But either way, when we put together a budget, whether you want to make the money I think you deserve or the one you want to make, whether those are far apart, I will applaud you and say, let's go, because that's your plan. But now one of the most important pieces of that budget is something called prime cost, as I started, which is total cost of goods sold plus total labor cost. Now, first of all, let me be very clear. Cost of goods sold is not purchases divided by sales. You do that each and every month, you're going to end up with a 10% food cost one month and an 80% food cost another month based on when those products came in, or worse yet, when you paid for them. See, we're on something on accrual accounting, earn OUs. So no matter whether I pay for that invoice when it hits the back door, it's an expense this month. So how do I do that? How do I know my cost of goods sold? Well, I need inventories. I need a beginning inventory plus all my purchases during that period, minus an ending inventory for that period gives me how much product was used. Use divided by sales is food cost, cost of goods sold. So if I have a 30% food cost, it means for every dollar it comes in, I use 30 cents in product. Little mayo, little tomato, little bread, little chicken, so on. Well, the only way to accurately know your cost of goods sold requires a beginning inventory and an ending inventory. And I'm not talking about an inventory that you count stuff to place an order. That's not an inventory. I'm not talking about an inventory what happens once a year when your CPA calls up and it's tax time and say, hey man, what was your year-end inventory? You say, I don't know, what was it last year? Oh, add $500. That ain't inventory. You actually have to count shit for value, man. And yes, I know what you're thinking. Oh my God, it takes 4 hours, David. It's so hard. Because you don't have a freaking system. Here's your system. You put a clipboard together, list all your products. Your chef walks in the kitchen, then goes in the walk-in cooler, starts, says number one item, milk. Oh, milk, 2. I wonder why it takes 4 hours. Now, I'm going to teach you at some point in time, if you stick with me, something called shelf-to-sheet inventory. Not today, but I have $5 million restaurants who take inventory in under an hour every single Sunday. Imagine knowing your cost of goods sold within minutes, in 60 minutes from start to finish, from counting to minutes putting into the system, knowing your cost of goods sold. That's huge. So I'm going to assume that most of you on this live event do not take inventory, because that's what I find is common practice in the independent restaurant world. Oh, I generally know my numbers. Well, you generally ain't making the money you deserve. Well, with that said, what you want to do is take your last 12 months purchases divided by your last 12 months in sales. That is pretty damn good, because your fluctuation in inventory in that great long period of time with all those sales came in, all those purchases, is going to be so small that it's not going to move the needle much. So if you don't take inventories on a monthly, if not way I want it, weekly basis, don't know your cost of goods sold, you're using purchasing divided by sales, you must use 12 months into 12 months. Now that's your cost of goods sold. Then we have your labor costs, what I call your raw labor costs. If a cook makes $10 an hour, punch in and out for 1 hour. Owners, just $10 come out of your bank account. No, $12, $13 comes out of your bank account because taxes, benefits, insurance, they're a part of prime cost too. So we've got to make sure we take raw labor plus our taxes, benefits, insurance. There's our prime cost. Wait, what about managers? Yep, hourly managers, part of prime cost. Salaried managers, yep, part of prime cost. What about owners? There is the rub. If you're an owner that works 5 days a week on the floor, as a manager, scheduled manager, keys in hand, you need to run that shift. You are a part of prime cost or an adjusted salary. What do I mean by that? Let's say you pay yourself $60,000 a year, but for your sales volumes, you'd pay a general manager $40,000. Then $40,000 of your salary is a part of prime cost. The rest is an expense, just operating overhead, you chewing up profits. Because why? I want to fire you at some point in time. I want you working on your business, not in it. That means you're going to be working on big picture, budgets, marketing, training. You're going to be working on leading the team. You're going to be coaching people. You're going to move the business forward. You're not going to count stuff, right? You're not going to run a shift. I don't care if you don't want to show up. If you want to show up on a shift and be a part of it because you want to touch tables, that's great, but you're not scheduled. You should be able to leave that building and you've got management in place and it's running like you were in that building. That's what we want. That's our goal. So again, if I paid myself 60, but I only pay a GM 40 of that belongs part of prime cost. What if you work 2 days a week on the floor? Then 2/5 or an adjusted 2/5 of your salary is a part of prime cost. Get it? Now do know if you have a marketing person, an accountant, or whatever it is in your building, they're not a part of prime cost. I only want those individuals, those people, and products that it takes to run the day-to-day operation for the guest. Well, total cost of goods sold plus total labor cost, including taxes, benefits, insurance. Well, then what do I measure that against? Gross or net sales? Before you answer, I want you to think about it. Most of your POS systems, I'd probably say 8 out of 10 POS systems, what they label gross sales is actually net sales. They're wrong. So what do? Let's define it. First, gross sales is the ring at the register before discounts, not including sales tax. Sales tax is not a sale. Sales tax is the pleasure the government gives us of holding their money, and if we don't pay them fast enough, they penalize us like they're the mob. I mean, it is the most expensive money you'll ever touch, and unfortunately, we've all done it, and we learned that lesson. Don't mess with the government's money. So gross sales, the ring of the register before discounts, not including sales tax. So if I ring up a $10 burger and have a $5 comp, doesn't matter about sales tax, gross sales is a $10 burger. What is net sales? Net sales are the ring of the register minus discounts, not including sales tax. So if I ring the $10 burger but comp $5, my net sales is $5. Now let me ask you a question. I want you, those of you who are in on the chat, I want you to type this answer in the chat box. I want to get a gauge for what's out there. Do we measure total cost of goods sold plus total labor costs divided into gross sales or net sales? What say you? Gross sales or net sales? Okay, hopefully you've typed in there by now. The answer is gross sales. All too many restaurants operate off of net sales, and it gives you a false number. Look, whether you operate off of gross sales or net sales, our bottom line profitability is exactly the same. What we pay taxes on, income tax, is exactly the same. But look at this. If I ring up a burger at $10 and I ask my chef to put a recipe cost card out using $3 in product, use divided by sales is a 30% food cost. $10 burger, $3 in product. 30% food cost. Now, if I comp $5 of that $10 burger, do I use half the product? No, I still use $3 in product. What's my food cost now? 60%. I've doubled it. Now, is that chef's fault that you decided to do a coupon? Because you decided to take care of a guest. Now, don't get me wrong. If you take care of a guest because you're comping it because the food was bad, service was bad, we're going to pay attention to those things, and we are going to change those things that they don't happen again. But truth of the matter is, I asked chef to put out a $10 burger, use $3 in product. That's my measurement. That's my grading system for chef. The fact that you comped $5 is not chef's fault 90% of the time, right? Now, still not with me to use gross sales? All right, my social working friends, you decide to run a charity event in your restaurant. Your favorite charity makes your heart sing, just makes you so happy. You're going to run a $14,000 day. You're going to close the restaurant. All it is for your charity, $14,000 day, and you've decided because your heart is so big, you're going to comp 50%. So let me ask you a question. Do you bring in food liquor, bottled beer, wine for a $14,000 day or $7,000 day? $14,000, right? Do you bring people to handle a $14,000 day, right? Your labor, or a $7,000 day, a $14,000 day? Do I measure prime cost off of gross or net sales? The answer is gross sales. Understand? We have to make sure we are fair to our management team, that we are grading them on what they can control, not what they cannot. Now, when I started this business over 14 years ago, that prime cost target was 65% for a full service restaurant, 60% for quick serve. Now, I thought I was patting myself on the back. I'm like, hey man, I got my members at 60%. Then things changed, man. Worst day in modern American history, my lifetime, is 9/11. Why would I bring that up in this event? Well, on the 12th, what happened to your food cost? Old timers, what happened to your food cost the very next day? They shot up. There was a huge adjustment in our industry. Fuel went up, food prices went up. It was just a nightmare. And ever since, have your food prices gone down, or every delivery do they go up? They damn near go up. With the exception of some commodities that fluctuate, they still trend up. We also have $15 minimum wage hitting across the country. If you're in California, Los Angeles, if you're in New York City, right? If you're in Seattle, Washington, certain areas, and then expanding in those states, they're at $15 minimum wage. And most of those states have no tip credit, which means they have servers making $15 minimum wage plus tips. And cooks, we can't pay them much more. They're making $15 minimum wage. This is our industry. This is what's happening. We now need EPLI insurance, employment practices liability insurance. We have all these things chewing our profits. They're going out the door. So these numbers don't work anymore. So I'm here to tell you, we here at therestaurantexpert.com tell you, if you do at least $850,000 a year more in sales, your new prime cost target is 55%, not 65, 55. That means if you're $1 million a year business, gross sales, you're running 65% now. Patting yourself on the back. Look at me, I'm doing a great job. I'm telling you, there's 10 points on the table, or $100,000 in bottom line profitability if you take the time to do the work. Now, I'm not telling you it's going to be easy. There's hard work. But how many of you in the chat section right now, how many of you would do the work? If I could give you $100,000, no get rich, you've got work to do, you don't have to increase your sales, but you have got to get this work, and it's going to be hard. You're going to have to get people to get on it. It may be a challenge. You may lose some good people. How many of you type, you would do the work? Yes, you do the work. No, you wouldn't. Type it in the chat box right now. I want everybody to have an opportunity, because I want it on record. I want to see it on record. Well, those of you who said yes, you lie. You really do. You love the idea of work. You love the idea of systems. But when you realize you've got to get people to do the work, often we fail to lead. We often let the tail wag the dog. We may have 3, 5 key employees that tell us, you don't understand, that David Scott Peters, he's nuts. Our restaurant is different. What, do you serve with a limp? I mean, you got food, you got beverage, you got people. We've got customers. There is nothing different about your business. So you've got to ultimately decide if it's possible. I'm going to tell you right now, what I'm about to teach you on labor systems has everything to do with the 55% prime cost. Don't get me wrong. If you want to run 65, I will pat you on the back because you've made that decision. But 55 is possible. And if you don't think 55% is possible, you might as well log off, because you're right. It means you're not willing to do anything to change it. You believe it's not possible, therefore it's not possible. Understand? Look, I've got $5-6 million restaurants that run 42% prime costs in the height of their season. They're minting money. What is possible without giving up guest satisfaction, without cutting product quality, without doing all those things that destroy the restaurant business, by putting the correct systems in place, managing those systems, training those systems, holding people accountable to those systems, you can change your bottom line. You can get your life back, have managers know their job, make the money you deserve. So if you want that, you're in the right place. But let me be very clear. How we get to prime cost is not a cookie cutter approach. Every restaurant is different. You could be a full service family restaurant, 30% food cost, 25% labor cost, that's 55. You could be a burger restaurant, run a 20% cost of goods sold, 35% labor cost, that's 55. You could be a steakhouse at a 40% food cost, 40%, 20% labor cost. Concept called cash contribution. Now, do understand what it means is if I'm selling a steak for $35, $40, $50, and it's a 40% food cost, it still only takes a $10 cook to flip it that it would take the same $10 cook to flip a burger. So while the food cost is high, the ring at the register is high, the cash contribution's high, but more importantly, it drives my labor costs down. That's why you must pay attention to labor cost and cost of goods sold together. Why did I cover this before I went into the labor section? Because I don't want you to leave this webinar, this live event, thinking, oh, David told me to only cut labor. No, they go together, and it starts with a budget. What else can a budget do for me? It's extremely important. I want you to look at this example. This is a real example from a budget from one of our members years ago. This is our desktop version of Budget Creator. We now have an online version. With that said, if you look at the yellow markings, we've got months that have very different sales. In the month of April, 165,000, but June, 420,000. That's damn near triple their sales 2 months later. Now, why is it important to do this? Well, in our budget, we determined to hit a 55% prime cost, our raw labor, not including taxes, benefits, insurance, that's 3-4 points added onto this, but my management team can't control when somebody reaches their FICA SUI limits, right? I don't want them doing that. They can control if somebody makes $10 an hour that they do so. Well, when we look at this, say our budget of 28.89% raw labor cost, how do I get there? Well, most people hear a national average of 32% for full service restaurant from the NRA, and they try and run every single month that number, and you can't. Some months are impossibly hard, some months are impossibly easy. So take a look at this. Here are those 3 months that I had in yellow. 1 month, the raw labor cost target is 32.56%. The next is 19.53, following 27.61. But if I go all the way across the year, when I'm done, achieving a 55% prime cost, I'm at 28.89%. Why is this? Why is it all over the board? Well, there's some months where your management team, your salaries are fixed expense. Whether you do $1 or $100,000 in sales, you owe your managers money. It's salaried, right? So in our slow months, they chew up all of our available money. And in order to run the business, I still got to pay line employees, which means I'm at something called minimum staffing levels. I've got 1 cook, I've got 1 server, I've got 1 manager, and the only way to fix this is get more butts in seats. Then we've got those months like the 19%, a $420,000 a month in this restaurant. Why are we so low? Because my managers still get paid the same amount of money, but as a percentage of sales, it's smaller. And at some point in time, I reach my maximum efficiencies, meaning I can't add another cook, I can't add another server, I can't add another cashier, name the position, whether quick serve or full service, I can't add any more people. So even though I have the money for them, I'm at maximum capacity, which means since my managers take a smaller piece and I at some point reach a maximum payroll, I'm efficient as hell. I make a ton of money. And each month is different. So it's very important that we do a 12-month budget so that we know our labor cost target by month. There will be months it's higher, months it's lower, but by the end of the year, in this example on this slide, we're going to be at 28.89%. That gives us our 55% or under. Now, how do we get there? How do we use those labor dollars correctly? How do I stop bleeding? What's the smartest way? It's a system called the labor allotment system. This is magic. It is probably one of the easiest systems I teach, but one of the most difficult to implement. Why? Because we've got to do some work. Now let me show you how it works. To start off, before we can ever go into this system, I need you to do what? I need you to audit your timekeeping. Go to your point of sale system, go in there and audit that everybody's working in the right job codes at the right pay rates. For instance, pay rates. If you hired me 5 years ago at $10 an hour, and I've been here 5 years, odds are I'm making $12, $13, $14 an hour, right? Well, odds are when you call in your payroll, you go from the POS system, you grab the numbers, phone them in, fax them in, type them in, online computer, doesn't matter. I put numbers in. How many hours? Well, the payroll knows what my real pay rate is today, but the POS system doesn't, because all I use that for is clock in and clock out times. So you need to make sure you change me. If I'm making $13 an hour, not 10, you need to change me to $10 an hour. Next, you need your employees to punch in under the right job codes. We have people of multiple positions. They're a server trainer. They're a server or a bartender. They're a cook, they're a prep cook. They're a dishwasher, they're a prep cook, right? We have people with multiple positions. Now, some of them get the same exact pay rate. Some are different, like a server and a server trainer, different pay rate. Well, I want you to make sure everybody's got the right job codes. No matter what job they do, they're put in the point of sale so they can punch in and out in the right job code, even if it's a pain in the ass. Meaning I've got a cook that comes in and does prep in the morning, have them punch out when prep is finished, punch back in as a cook, even though it's the same pay rate, and run the rest of the shift because I want to see where I'm using those hours. Very, very important. If you don't do this process, what I'm about to teach you will not work for you. In fact, it will create pain for you because it'll have complete garbage. Any system, whether it's software, whether it's a calculator and pencil, or whether it's a spreadsheet, garbage in, garbage out. So I've got to make sure I'm starting with the right information. If you change it today, you cannot use the system for 2 weeks because it won't change the earlier in the week. Change the pay rates and clock outs? No. It's a database. It starts from this point. So assuming a Monday through Sunday work week, as soon as I've passed a Monday through Sunday, everybody punching in the right job codes, right pay rates, I can use this system. So odds are if you make those adjustments this week, next week is your first week to have accurate information. The following week after that is when you can do what I'm about to teach you. Now again, I'm going to show you the math behind it. I'm going to show you the PowerPoint. I'm going to walk you through all this stuff. And then I'm going to show you how we do it in real world in a moment. So first, once you've put all the right job codes, right pay rates, everybody's punching in and out. We've got managers making sure they're doing that correctly. I need you to run on your point of sale system called a labor summary report. Labor summary isn't by person, it's by position. It's kitchen, or cooks, it's dishwashers, prep cooks. It's servers, server assistants or busters, food runners, right? Name hosts, from quick serve, cashiers, drivers, doesn't matter. It's going to have the total hours broken up by regular hours, regular pay, overtime hours, overtime pay. And what that's going to do is give me the ability to know a lot about last week. If we all assume that last week that actually happened is the gold standard for payroll, we're going to use that to schedule next week because I'm in this week. I can't use these numbers. So I use last week to schedule next week, and I'm going to use this system, these numbers, to schedule next week to tell each one of my managers how many hours they have to schedule, how many dollars they have to spend by position. This is magic. It's incredible. This way, instead of bringing 7 servers in to play grab ass at the time clock, right, to only send them home 3 hours later, tick, 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 I've lost money, it's too late. I can bring them in stagger start. Bring in 2 to set up the restaurant at 4 o'clock, 1 at 4:30, the rest at 5. Now, that doesn't seem like a lot, but every minute worked is money out of my back pocket. I still have my 7 servers to work the rush. I'm never going to deplete service levels, but why pay them to stand around and pick their ass? And I will tell you this. In the restaurant business, most of us believe that if we want to give better service, we add more servers. We add more cashiers. Couldn't be further from the truth. Do you know when we're the most efficient? Let me go backwards. Think about in your restaurant, when you have more employees than you have customers, what do your employees do? They talk to each other. They ignore the guests. We give horrible service. That's when guests are like, can I get, right? So what I'm going to tell you is we give the best service if this is my foot and my pinky toe is just in the weeds, right in the weeds. I'm not in the weeds. I'm just on the edge of the weeds. That's when we give the best service possible. Because my service staff, all they can do is pay attention to their tables, run food, pay attention to the tables, go to the dishwasher, pay attention to the tables, pay attention to tables. There's no time to play grab ass. It's all guest-centric. We're focused on the guest. That's when we give the best service possible. So how do we get there without cutting so much labor we can't run well? I don't want that using this system. So watch. We've got our numbers. What kind of numbers do we have here? I want you to pay attention. If we come across, we've got the position, regular hours, regular pay, overtime hours, overtime pay, and then we get total hours, total pay. If I divide those down at the bottom, I'm going to come up with an average hourly wage of $7.45. I'm going to use last week's average hourly wage to schedule next week. Why does this work? It works because it's a weighted average. We tend to schedule the same people week after week, shift after shift, including we've got an employee we got to schedule overtime because we don't want him to work another job. We are creatures of habit. So it's a weighted average. This is what we generally do. That's with, if I'm in a tip credit state, California, New York people, hold your breath when I say this, but we've got states like Texas and Georgia that are still $2.13 an hour with tip credit for servers. And we have $15 minimum or $15 cooks. Doesn't matter. That average works because it's a weighted average, much like menu mix. But you're also going to see that I have average hourly wage by position from $5.18 for my servers to $11.46 for my cooks. Column next to it, hours percentage, if you look at server line, 45.6% of all hours worked is 632 total hours for servers, divided into 1,387 hours total for the restaurant for that week. Says that servers represent 45.6% of all hours worked. So if I ask you, I said, hey man, if I have 1,000 hours allocated next week, how many do my servers get? 45.6%. Get it? Real easy. And then all the way in the bottom corner, 25.82%, that's my labor cost for hourly employees. That's it. Using this information, watch, having forecasted sales and a target for my budget. Remember, it's going to be different for each month. I'm going to be able to tell you how many hours and dollars you have. So we're going to answer these. We're going to use these assumptions. $200,000 month. We're going to assume it's a 4-week month. Makes life easier for me. A $50,000 week. I'm going into forecasted sales for next week is $50,000. Use maximum coverage. Use everything. I've got a $3,000 in salaried management. Means if I do $1 in sales or $100,000, I owe them $3,000. I want to use every hour possible. And my average hourly wage last week is $7.45. We're going to answer these questions. Don't worry, I'm going to blow by them because I've got them listed on a different slide. Here's the math behind it though. Sales forecast came from my budget. Labor target, raw labor cost minus taxes, benefits, insurance, which means prime cost, we remove taxes, benefits, insurance, my cost of goods sold, what's left over, raw labor. I'm going to multiply that, tells me how much money I can spend. Then I've got a fixed expense called management. I take that away. Tells me how many dollars I have to spend on hourly people. Divide that by $7.45, right? The average hourly wage tells me how many hours I have. Then I allocate those hours based on last week. 45.6% of those hours go to servers and so on. Once I have the total number of hours, I go to the average hourly wage by position. 518, 1146, multiply it out. Next thing you know, bang, I know how many hours and dollars there I have to use next week to be on budget. Watch, that was fast. Here's the math. I have a forecasted sales of $50,000. Target labor cost, not including taxes, benefits, insurance. So this means it's a 34% labor cost on my budget. 30% times $50,000 says I have $15,000 I could spend on labor. What about those managers? $3,000 fixed expense. So I take that off the top. That means I have $12,000 to spend. Now wait a second. What if I had $20,000 in labor to spend? I remove my manager salaries. I've got what? $17,000. What if I had $10,000? That's when you grab that bag and go, right? You hyperventilate in the off season. Holy crap, my managers are chewing so much of my money. That means if I only had $10,000, I'd only have $8,000. I'm sorry, $7,000. $7,000 to spend, and I need more. That's why we got to have a budget. Some months higher labor costs, some months lower, but by the time we get to the end of the year, we're on budget. So now I have $12,000 I could spend. Remember the average hourly wage last week? $7.45. Divide $7.45 into $12,000. How many 745s are there? 1,610, almost 11. That's how many hours I can schedule next week. That means if sales go up, guess what? I have more hours. If sales go down, I have less hours, depending on my budget, right? How many of these hours do servers get? Remember last week's labor summary? 45.6% of all hours worked were servers. 45.6 times 1,611, 734 hours are servers. I do that for each position. I total them up, make sure they match 1,610 hours and 0.7 hours, right? Then we go back to those average hourly wage. Remember the Average hourly wage, 518, 1146. Here we go. We take the allocated hours, 733. We multiply it by last week's average hourly wage for service, 518. It says I'm going to spend $3,801. I go down to my cooks. I take the 405 allocated times last week's average hourly wage, 1146, come up with 4,644. Do this for each position, total it up, $11,995. My budget was $12,000. I'm $5 off. By the way, who the hell on this live event would be pissed off at David Scott Peters because I had you $5 off on budget, right? Get out of here, man. Do you know why we're $5 off? I did this calculation with a calculator. If you used a spreadsheet or our software, it's exact. There's an extending decimal point you never see. But if you do it by calculator, I'm $5 off. What did I do? I can look at this and say, hey, front of house manager, you have 734 hours to schedule in servers, and you've got $3,801 to spend. Hey, kitchen manager, chef, you have 405 hours to schedule. See, who cares about the money? Tell the manager that they're over budget. Hey, man, you're $300 over budget. How the hell do I fix that? Hey, man, you're 30 hours, you're 15, you're 12 hours over budget. That I can fix. That I can fix. This is powerful. Now, I schedule like I always do. I run this allotment. What do? I compare the two. Because when I schedule like I always do, often sales fluctuate. I don't adjust for sales. I just do what I've always done. So now when I look at this, sales are going down, trending down, it's going to tell me I have less hours to schedule. If sales go up, hey man, you're underscheduled. You need to schedule more. So I go to something called a schedule variance report. I'm going to show you this in the software later. But you have to total up the budgeted wages, actual wages. Actual wages come from your schedule. Budgeted wages from your allotment. I need my budgeted hours, my actual hours. I subtract the two. And in this case, I want you to notice all the way at the bottom, I'm 13, almost 14 hours over budget. My job is to have my managers get that to zero. Better yet, if you look at the top line, my kitchen is 7.22 hours over budget. So when I give up scheduling to a manager, I'm going to make sure it's on budget. If I'm over budget, before I tell you my schedule's ready, I need to edit that schedule. If I'm the kitchen manager, 7 hours. If I'm the general manager, I need 13, almost 14 hours removed from the schedule to stay on budget. Now, before you go nuts and go, holy shit, that's a lot of money. You mean I'm going to cut people's hours, this, that, the other? Yes, but nobody said you had to cut a whole employee. What is 7 hours? What if I cut 4 employees 15 minutes a day? That's an hour. If I did that in my kitchen, 4 employees, 15 minutes a day for 7 days, I'm on budget. Do you understand? Think about it. What pays your bills? Cash or profits? Cash. Cash is king. And if you just start wasting your cash, allowing people to stand around with their finger up their ass, hey, don't cry to me. You want to change that without giving up guest satisfaction, without having an uproar. Oh my God, you're cutting my hours. Oh, you're cutting 15 minutes? Look, if we're busier, they're going to work more than 15 more minutes. You understand? You're already cutting. So really, really important. This is huge. Schedule for the needs of the business like you always do, then put it on budget and adjust your schedule to stay taking care of your guests. Now, once we've done this, you schedule like you need to. You may be over budget on a Monday. Why? Because you had your ass handed to you over the weekend. You got all this prep to do on your slowest sales day of the week. Easy for me to say. There'll be other days like Friday you kick ass. If you use the hours allocated by position, then you're going to end the week on budget. And each day, by the way, will have a separate labor cost target. We started with a budget with a different labor cost by month. Now we're going to have it by day. By day. This way, if you approve the schedule using the hours allocated, some days will have a higher labor cost, some will have a lower. Your managers will love you instead of hating you to come and go, why is labor so high? Why is labor so high? Right? And you approved a schedule to be higher in labor. How about we manage to that number? And by having it laid out, we can schedule for the needs of the business and be on budget. But now when we monitor our managers, when we look for their success, it's based on day of the week. That's huge, man. You really want to take control of your business? You need to know your labor target by day, not just for the year. Now, just because we did that, that's a magic. Who said we scheduled the right people, the right shifts. We need to look at efficiencies, something called dollars per labor hour worked. So before I edit my schedule, one of the things I want to do is look at my efficiencies. Now, what I want to do is take all my hours, a man hour worked, if you will. If I've got one cook on the line between 10 and 11, that's 1 hour worked. At 12 or 11, I bring in a second cook. Well, between 11 and 12, that's 2 man hours worked. At this point, 1 was worked between 10 and 11, 2 between 11 and 12. Right now, I've got 3 man hours worked. It doesn't matter how many people, it's how many man hours were worked. Well, we're going to do this for all positions. We're going to compare differently. So my kitchen is against food sales, whether dishwashers, prep cook, line cooks. My front of house, if they sell or if they work with both products, food and beverage, my hosts, my servers, my food runners, my busters, if you will, both. I'm going to take their hours divided by total sales. But my bartenders, I'll probably only go against liquor sales. They sell some food, but they're really liquor, bottled beer, draft beer, wine. Make sense? Now, if you look at this example, we total up the total hours by day, and we know the sales, we total it up, we take the total hours, 31 hours, divided by $4,100 in sales for a Monday, and we come up with a dollars per labor hour worked of $132 per labor hour. Now, I want to remind you, when you were in middle school, there was a problem we called a word problem. I hated them, right? A train leaves Chicago at 3 p.m. traveling 25 miles an hour. Another train leaves Philadelphia at 7 p.m. traveling 50 miles an hour. Where do they meet? My answer was, the answer is X, but my answer was I don't give a shit. I hated word problems. Well, this is just a word problem, right? We just need to know. And one of those word problems was widgets. Remember, XYZ factory makes widgets. How many widgets do they make in an hour? I'm like, what the hell's a widget? As an adult, I understand. A widget is $1. How many dollars does each employee produce for every man hour worked? How many dollars do they produce? What we can determine based on our labor allotment, what we did, and some fancy math, we can determine what our dollars per labor hour worked should be. In this example slide, I take line cook, prep cook, and dishwashers for next week's schedule, compare them only to food sales, what I actually scheduled, what I have on a budget, and it gives me variances. So you'll notice on Monday, down at the bottom, it says variance 32 hours. I'm 32 hours over budget. But I don't care. If you look in green, bottom right-hand side, I've highlighted that. $63.25 is my efficiency. In order for me to hit the budget, which is all the numbers in the bottom left-hand side, those boxes, that came from our labor allotment. In order to be on budget, I need to run an efficiencies of $63.25. For every man hour worked, we produce $63 in product. Well, you'll notice on the far right, all the way last column says 60, the yellow line, $62.76. I'm under budget. I'm over budget. And all the way to the bottom, I'm 6 hours, 5.92 hours over budget. So what I've got to do is I've got to look at my efficiencies. And in this example, when you look at it, I've got a Wednesday in red. I expect to do $5,800 in food sales. On Thursday, $7,200 in food sales. On Wednesday, I scheduled 95 hours. On Thursday, I scheduled 95 hours. A $61 efficiency versus 76. Why the hell is this happening? Because we're creatures of habit. We tend to schedule the same people week after week, same shifts. We promised our cooks all their hours, and we got into a point where sales started to go down. We got to a point where maybe we had an event. Maybe we're a bar restaurant, now we have karaoke, blah. But we have karaoke, switching our sales to another day of the week. It used to be on Wednesday. And now Wednesday is overloaded on labor. See, when I go to edit my schedule, I can know based on my efficiencies where I need to make the change. This is huge. Not only did I give you the ability to go into the week on budget, but where should I be using or cutting, in this case, my labor hours to be efficient? This is a game changer. Now we change our schedule. Now, again, if we look at this example, maybe it's a little clearer. 5,800, 95 hours, 7,295. Now, if you told me on Wednesday that I had a salaried chef or kitchen manager working line on that Wednesday, or Thursday, I should say, I don't know. This doesn't make sense. You can excuse away losing money, or you can do something about it. And I've given you the tools to do something about it. You now know how to schedule. You know how to basically on budget, how to create that budget. You know how to look for efficiencies. You can see how giving up scheduling to somebody else makes you more powerful in your business to make change, because you're not doing all the little shit. Somebody else is, and you're verifying, you're trust and verifying, and you've given the tools to not only schedule for the needs of the business, but on budget, and then see where to move those. Now, me as a manager, I can make those changes and ask you to take a look, not you do all the work. Now stick around. If you've got any questions, I want you to type in the question box. In order to do that, you must log into your YouTube channel account and then you're able to type. I've got Greg Sauerback and Jenny Brooks. They're going to be taking your questions, feeding them to me. I'm going to answer for you in just a second. But what I want to show you is real world, how this all works. Now let me switch screens here. All right. Now I'm in our software. Smart Systems Pro, an online restaurant management solution, handles every aspect of your business. But right now, I'm going to literally take maybe 5 minutes or so. I want to show you how this executes in real world. Let's go to labor systems. And first thing I'm going to do is I'm going to go to my schedules. I'm going to schedule for next week. So I'm going to change my date range here to October 2nd. I want to switch to my servers because I know I haven't written that schedule yet. So I go to front of house servers. And boom, notice nothing's scheduled. Now, how do we schedule? By the way, I can see that they were already scheduled in other positions, line cooks. I can see when I've left comments, the little stuff that anybody can write a schedule. But to edit this, I just double click in here, comes in here, I see the master schedule, what they can and cannot work, but I can do a couple things. I can either drag and drop, or drag, I should say. I can hit the plus symbol, minus symbol. Hell, I could come in here, and if I wanted to, I could type. Doesn't matter. Any way you want to get it done. Hell, I can even copy and paste. Control, copy, come down here to another day and paste it. All right? Really simple. Well, I'm going to find out what I'm going to work them from till. I can assign stations. I can add phase, volume. I can do all those things. Now, I'm going to show you an easier way. I'm going to cancel this. I'm going to go to a scheduling template. I can schedule very quickly by how I think, by day of the week, not employee. So I'm going to grab any one of these templates. In this case, I've got winter. I could have multiple ones. And now I didn't fill all this out, but notice this. I can drag and drop schedules. I can right click and assign a shift. All right, I can do just about anything. I'm going to show you even faster way. So let's say we tend to schedule the same people shift after shift, right? Week after week. So I'm going to go to this week, to my servers. Oh, not October 22nd. I'm going to go to this week. Let's go backwards. 25th. I'm going to scroll down, go to my servers. Now, let's say I like the schedule. I'm going to highlight everybody, right click, copy schedule, pick October 2nd. Man, this is really hard. Save. Wait for it. Wait for it. Doing a little work in the background. Oh, son of a bitch, I'm done. So I'm going to go now to the October 2nd. And now I can drag and drop, I can edit, I can do whatever I want. This schedule's done. So I schedule for the needs of the business. That's what I've always done. So I've got all my schedules written, but we're not done. We then go to the labor allotment. Now remember, this is for the week, for the October 2nd, so I need to change my date range here so I can get to the 2nd. Oops, here we go. Now here's the 2nd. I'm going to double click on it just so to show you. You take your labor summary report and you literally type it. Type in regular hours, regular pay, overtime hours, overtime pay. It automatically totals. It knows your sales from last week. All this stuff happens automatically. Then you go to your budget. Notice here in the bottom left-hand side, 25.5% raw labor costs. I get that from that budget. Remember, based on the month I'm in, what's my budget target for that month? I type it in. Hit calculate. I'm freaking done. Done. I know how many hours and how many dollars I have to schedule week after week. Now, that's not magic. The magic is comparing, remember, the schedule variance. So I now go to my schedule variance report. Now remember, imagine your managers are writing the schedules. You're putting in the labor allotment. Then once they write their schedules, they simply come here to the schedule variance report, they run it, and they see that, say the kitchen manager knows I'm 10 hours over budget. Overall, I'm $190 over budget, only 7 for the There's some I'm short hours, some I'm higher. My goal is to get this all to zero. But for me, as the kitchen manager or chef, I need to get my line items to zero. So I don't need to micromanage people. They know what they're supposed to do. They need to figure out where they need to cut. We're going to go to dollars per labor hour. But before I do that, I want you to pay attention to something. Down here, variance on wages. $190 off. Now that doesn't sound like a lot until you think about it and say, man, there's 52 weeks in a year. So if I only bleed $190, now remember, I'm planning to lose money. This is next week's schedule. I'm on purpose planning to lose money if I don't make a change. Well, that's $6,500. That's over $6,500. Tell me, is there an owner on this call right now that couldn't handle $6,500 more in your bank account? And the truth of the matter is, most of you are wasting $500, $600. We're making $10,000, $20,000, $30,000 in labor because we're worried about giving good service. Let's bring all these people in. I'm not telling you not to. Bring in the right people at the right times on budget. You have to run your business on budget if you want to make money. Period. No questions asked. So now where do I adjust? Let's say I'm the kitchen manager. I'm the chef. I'm going to go to dollars per labor hour work. And I'm through a couple clicks, I'm going to make an adjustment. Watch. I'm going to go to October 2nd. I'm going to choose line cooks from my drop down. I'm going to compare them to what sales, food only, hit report. I'm done. Down here, I can see that I need to do $88 per man hour worked. I'm running 86. I am 10 hours over budget. Whoa, some bitch, where did we see that before? The labor allotment, which is these numbers down below. All these things come from the labor allotment. To be on budget, this is my efficiency, what I have to do. Long story short, without going through all the numbers, I want you to look at these sales. This is the food sales that we've forecasted, which is 80% of total sales is $6,600. $5,300, I'm going to use 67 hours. Now, I'm okay. I'm 7 hours over budget for that day, but maybe I had my ass handed to me and I've got all this prep to do on Monday. That means on another day, I'm going to be under scheduled, right? I'm going to right here, if I look at this Saturday, I'm 6 hours under budget. No problem. But I want you to look at this. Tuesday is $5,200 in food sales. Wednesday, $6,000. Would you expect to schedule more man hours on Tuesday or on Wednesday? Well, in this example, we scheduled 75 man hours for Tuesday, 70 on Wednesday. Now I'm going to ask you a question. Why is it 70 on Wednesday? Oh, I've got a salaried manager working? Well, now that might make sense. I'm a little higher budget. But let's say I don't have a salaried manager working. In fact, I have my manager, they're expoing, they're not even scheduled on the line. Their hours aren't in this. For either day, why is it that I have 75 hours? Why am I 15 hours over budget on a single day? And now you say, hey, if I'm going to cut my schedule, if I'm going to try and get rid of those almost 11 hours, where would I do it? I do it on Tuesday, assuming it's not, we're cleaning the hoods, we're doing other extra work. So now watch. Now I'm going to go to something called reverse labor system where I'm going to make the change. I'm going to grab October 2nd. And in this, I'm not going to go through all the math. I just want to show you how we make the change. Just know there's lots of good information on here. But I'm going to switch to Tuesday because Tuesday was the day I need to change. I'm going to scroll down. Again, without going through all the numbers, I'm going to go to my line cooks. And I'm going to figure out who to make changes with. So let's say I'm going to look at this Addison Bell. Oh, Addison I brought in weeks ago when we were busy and we've gotten slower. I'm going to get rid of her hours Tuesday. I'm just going to come in here. I'm going to delete those hours, and now I'm going to save that. Well, there's a few hours. I'm going to look down here and say, oh, wait a second. I know John Booth. You know what? I don't need him working till coming in at 4 o'clock. I can stagger him, could bring him in at 5 o'clock. Well, now I'm about 6 hours. Robert Billings, let's see. I know Robert. Let me see where Robert is. Oops. There we are, Robert. I'm going to double click on him. Tuesday. You know what? I'm going to bring him in at noon, 2 more hours. And, I'm good there. I think those are good changes. Not sure. Now, I can see what it does to my labor for the day, for the week. But what I'm doing is hit post schedule changes. Now what it's doing is taking all the changes to my schedule, moving them right here, moving to the actual schedule. This had pay rates and hours and all that wonderful stuff. So I can go look at my schedule. Well, before I do that, I can go to my schedule variance. Go to the second. And as you can see here, I started reducing those hours. I still need 7 hours or more hours that I'm going to reduce. Bottom line, ultimately what I do is as I reduce those hours, I go through. Once I've done everything, I'm the manager in charge of that schedule. You as the general manager or owner, go to each schedule, you look at it, and you see if it meets the needs of the business. And oh, by the way, what I do is looking in servers. Let me go to servers. That was my challenge. That doesn't matter. I look at the schedule. If everything matches, if my schedule variance is at 0, and the needs of the employer are met, needs of the business are met, I'm on budget, man. Then all I do is I highlight here and I sit there and I approve the schedule. Once that's done, now it's blue. All the employees can see it on their phone app. They can log into the system. It's now public knowledge. And I can highlight everybody if they're notified on their app, or I sit here, highlight everybody, click on this little email. It'll text message them or email them their schedule's been posted. This is huge. In a matter of no time, I'm scheduling on budget. Now, if you've got questions, do me a favor. You got to be logged into your YouTube account. I want you to type them in the question or in the chat function right now. Before I do that, though, let me kind of tell you a little bit more about what we do, and I'll answer your questions. First of all, I appreciate everybody being on today's live YouTube event. I want you to know therestaurantexpert.com here. We're here to help the independent restaurant make more money, get their life back, have managers know what their job is. We operate on a membership basis. It's monthly. You get our software. Smart Systems Pro runs every aspect of your business, from a daily manager log, cash controls, to online scheduling system with labor controls, including an app, food, beverage, merchandise, recipe cards, ordering, inventory, prep, key item reports, weigh sheets, culminating in a weekly budget variance. You want to make change? Oh, plus Budget Creator Pro, our online budgeting software, which ties into the systems. You have unlimited training support Monday through Friday, 9 a.m. to 7 p.m. Eastern Standard Time. Call all you'd like. There's a chat window. There's an email function. We have free software training 10 times a year here at our office. Send your people 2-day training and learn the software, no additional cost. You get access to me and my coaches. This is where we can help you with your business, write your budget for you with you, engineer your menu to find you 3 to 7 points, teach your manager cost of goods sold, help you move forward. Some of the best athletes in the world have the coaches, right? Tiger Woods has a coach. Michael Jordan had a coach. You name it, they have coaches. Why? They keep you on task. We can do that for you. You get all $8,000 of our training products digitally downloadable, whether full service, quick service, management training, employee handbooks, train the trainer, harassment prevention, you name it, everything you need digitally downloadable and included in your month-to-month membership. Workshops, seminars. We have 4-day seminars, 4 one-day seminars called Take Action seminars. You and a guest, no additional charge, twice a year. You want to show up at the 4? If I got extra seats, just pick up the phone. All right. We have my 3-day workshop called How to Run a Profitable Restaurant from Soup to Nuts. Instead of $1,500, it's $375 for you and a guest. Software training's everything. Now, there is no sign-up fee. There is no setup fee. It is month to month. So we're in this together. We've got to help you make change in your business, or you won't be around. All you got to do is give me 30 days notice. You can break up thinking like we're dating in high school. David, it's me. It's not you. I don't give a rat's ass. Man, if you're not going to do the work, then you're not ready for us. Look, I'm going to tell you right now, we're not right for everybody. I just like to think we are. Every restaurant should be on our system and allowing us to help you coach your business to success. But we suck. We create work. I suck. I create work. So if you're not ready to lead your team and really make the commitment to put those systems in place, we're probably not right for you. Now, I'm going to tell you right now, ShamWow, I can sell ShamWows. If you decide this is right for you, you let Greg Sauerback, our solutions coach, know you were on this webinar. I'm going to offer you 6 months, weekly meetings, you and your management team, where we're going to piece every week together and in 6 months' time have you fully implemented. If you listen to us, meet with us, we'll meet with you and your management team on a weekly basis to move this forward. I'm going to give that to you. That is an $800 a month bonus, almost $5,000. Why? Why would I do this? Because I know if you come into the system and you get results, I've got a customer for life. Guess what? The only way our company grows is you get results, and we want to ensure that to happen. Your investment is merely $347 a month, no sign-up fee, no setup fee, month to month. That's it, man. If you have an additional restaurant, it's not $347, it's $99, and you get everything. The daily manager log, cash controls, scheduling system, labor controls, app. You get food, beverage, merchandise, everything you need, weekly budget variance. But more importantly, we're a restaurant training and coaching company that has software. We're not a software company, so we're going to hold your hand every step of the process. Now I'm going to answer your questions. I've got a list of questions here that we're in. If you haven't asked a question yet, make sure you're logged into YouTube. Type it in the chat box, and my team is going to give it to me here. So Brent Sloan commented, I would pitch the case that it's net if net removes sales tax only. Discount should be included because raw materials are still being used. So why should you include sales tax when calculating prime costs only? Now, you misunderstood me. Gross sales is the ring of the register before the discounts, not including sales tax. Sales tax is not a sale. So hopefully that I answered your question. If not, give me a little more information. Let's see here. That was Brett. Stephen Todd, with the information obtained from the labor allotment, how much would that affect my server schedule stability? You're going to schedule the same people damn near the same week after week. They may not get as many hours. Unless you look at the dollars per labor hour work, and we may move a person from one day of the week to another day. You're going to have the hours necessary to run the business. But with that said, there may be slower weeks that people don't get the hours, man. Let me ask you a question. Would you rather pay everybody the hours they wish to have and the restaurant not make money, you lose your job, and the restaurant closes? Because that's really what we're talking about. Whose money is it that we're giving to our employees if it's free money? It's the owner's money. It's you as the general manager, a manager, it's your bonus. It's the equipment you want. We bleed it, tick, tick, tick. Next. All right, we've got, make sure I'm staying on here. We got breads. All right, here we go. Can this labor control process work in catering or event settings? How so? Yes, it can. Because it's literally, when I know my sales, I know how much labor it takes. It's a weighted average. So if I do more parties, guess what? I'm going to have more labor, and it's going to be allocated to those things. But the same is true. There'll be some parties, maybe you need a little extra labor. But because we're using prime cost, that month, like a December, I may have a much lower food cost because I'm doing so many parties. I could run a higher labor cost. We need to stay on budget with prime cost. Someone asked here, someone sells alcohol only. I only sell alcohol, no food. What should my prime cost target be? Great question. Probably 5 points lower or even lower than that. Why? Food cost and pour costs are damn near the same now. We're at scratch kitchens because we got to make up the price increases. Liquor prices are going up, but it's efficiencies. See, I may, instead of 55 for full service, I may look at 50 or lower, because it takes one bartender to do $1,000 in sales, sweating in ice, right, in an hour. It takes 5 cooks to do $1,000 in sales in an hour. So it's efficiencies, bring that down. Another here, it looks like last question I have is Alfred Garza. Smoky Mo's, hey Alfred, does your schedule plug in the employee's hours, wages as we make the schedule? Yes. So in the reverse labor system, it's going to show you their average hourly wage. It'll show you if they go into overtime, all their wages are a part of this. That's how we connect the two, not only the hours scheduled, but the budgeted wages and the actual wages are calculated based on your raw labor cost. Excellent question. I'm going to see if there's any more questions. We'll give you 2 more seconds here. Going once, going twice. I think that's it. Hey man, I want to thank everybody for being on today's YouTube live event. But if you're interested in learning more about what we do and how we might be able to help you, I'd ask you to give us 15 minutes of your time. Call Greg Sauerbach. His number's on the screen, 1-877-457-6278 at extension 106. You can email him at Greg, G-R-E-G-G, at therestaurantexpert.com. Or you can go online to therestaurantexpert.com and learn a little bit more about and schedule a request for time with Greg. All we want, if you do that, if you're at all interested, there's no commitment. We will not hound you to death. Give us 15 minutes of your time. Greg's going to learn more about you and your business, tell you what we do, and see if there's a fit. At the end of that call, you can say, Greg, this is not for me. Guess what? We're done calling you. You'll be on my email list until you tell me I'm an SOB and you don't want to be a part of it anymore. So you'll still be up to date. But we won't call you because we understand if we have to talk you into this work, you aren't going to do the work. But if you are interested, we'll set up a demo. It takes about an hour, hour and a half. We share our computer screen with you, as many people as you want, anywhere you want, on the phone. And we will show you the software, tell you more what comes with membership. End of that call, you say, it's too much freaking work. I don't want it. And we're done with you. Or you got more questions, set up another call. Or better yet, hey, sign me up. If you're ready to take charge of your business, if you want to make the money you deserve, get your life back, have managers know their job, we're here to help. We hope to hear from you. Do me a favor, like this video and subscribe now so we can keep you up to date. Thanks, everybody. Appreciate being on today's webinar, and I look forward to talking to you in the future. Bye now.